Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, we're going to go through the Forex market outlook. Just going to start by saying Happy New Year. I hope you have a great trading year. And if you have any comments or questions or anything you'd like to see from the YouTube channel this year, let me know in the comment section below and we'll get back to you at some point. So let's start off with the first strength and weakness table of the week. And what's really apparent to me is that we've got a nice little divergence play on the go in terms of the divergence between the strength and weakness analysis and seasonal analysis. Now, typically through the December period, we see the dollar fall, and that's quite evident that that's happened with the strength and weakness analysis recently. Dollar has been very weak. We've seen the dollar pretty much move lower for the majority of the past few months. So we've seen the US dollar fall into this extreme of being extremely weak. Now, if I just head over to the dollar index seasonal chart, we can see here, typically, again, through December, the market falls. So we know that the seasonal analysis at the moment for the US dollar is playing out because we've seen that fall through December, which has been shown here as well on the strength and weakness analysis. So what happens in January? Now, typically in January or the end of the year, the market finds a bottom and rallies up till the sort of start of April. Okay, so typically what we're looking for at these time of years is that dollar to rally. So if I was to look at the strength and weakness table, it's saying that the dollar is extremely weak. It's at a point where we could start to see it reverse. We've got seasonal analysis suggesting that the market finds a bottom at the end of the year and through the start of the year, and we usually typically see the dollar rally in January. So we've got a couple of things there which suggests to me that we could start seeing the US dollar rally. Now, last week we looked at the potential for the dollar to start gaining a little bit of strength, and what I quite liked here on Euro US dollar in particular was the fact that the market came up into an area of interest for us and started to drop slightly. We were looking for the market to potentially break and form some new lows, but obviously we said that might be a little bit early because of the Christmas period, low liquidity period. We don't typically see too much going on, but what we did see is a really nice strong bearish rejection at these previous structure highs. So it looks to me like the dollar bullishness could start coming into play here. Now, one way we'd really like to see that happen is if we do start getting breaks of lows, and the current low is just through here. So what I'd really like to see out of the Euro US dollar price is a breakout of this area. So we've got this almost like a little consolidation pattern. If we were to break through these lows, we could really see a change in trend, and we could see a drop at the start of the year through to around about that April time. Now, the most traded areas of last week was up at this 122.86, which is just through here, and the most traded area of the week before was 121.85. Now, we did have a slight retest of that, but we didn't really get a conclusive test of this. So the plan for the week for me is if price was to climb back up into 122.86, I would look for the market to defend that level, to see price push down from that point and head towards this 128.55. Okay, so that's what I'm going to be looking for, or 121.85, I should say. So that's what I'm going to be looking for on Euro US dollar, in line with the potential for the dollar strength. Kiwi as well. Kiwi actually did something really nice. So if I just go into the weekly time frame first, we looked at the most traded area in this block just through here, and we said that that number was around about 7223. Okay, so the market came into that point, spiked into it, and rejected away from it, which is a really good sign for us because at the moment it's showing us that the market is defending this level just through here. So if the institutions, for instance, place shorts at this point and the market moved away, then are they going to defend that level, and are we going to see the same thing again towards that sort of April time? Then April typically see the dollar lose a little bit of value. So I'm looking at this thinking that we are going to get some downside here on Kiwi now, Kiwi US dollar. Looking at the daily time frame as well, if I just zoom in, we've got this really nice potential pattern setting up where the market is kind of making those higher highs. We're starting to see this sort of expansion pattern in here, which we could lead to a little bit of downside as well. But essentially what we have here is the market came up into that key level, rejected it. Most traded area of last week was 71.98, which is this level just through here. Okay, the most traded level of the week before was 70.95. So what I'm looking for here now is maybe a retest, or we may see price breakthrough and retest the major level again. But if we were to see a market rally up, hit this level, or even kind of reject this 7198, I'd be happy to look for shorts in and around this point for targets down around about 70953. Okay, most traded level of last week, the most traded area of that block, which could be a nice retest of that area. So yeah, I'd like to see price at least retest one of these two levels in order to look for some shorts opportunities on there. Another market that interests me is dollar Swiss. So if we actually just take a look at the sort of daily time frame on dollar Swiss, the market broke lower in here, okay, but then closed quite quickly back above those previous structure lows. So are we going to see some kind of double bottom pattern here with price then moving to the upside? Now I looked at the most traded area within this sort of consolidation zone just through here. Okay, so that 0.915 area is a really nice area. So 0.9115 is a really nice area to look for potential targets, okay, because if we were to start seeing price trade back to the upside, this was the most traded level in this area, so I would expect a retest of that point. Whether price then breaks out and continues or we break down is obviously the question for when we get to that point, but I like the opportunity of buying into this area through here. Now, a couple of different levels again just to be aware of. The most traded area of last week is where price is kind of sitting at right now, if I just expand that through there. So this 0.8848 is what the price is kind of retesting at the moment. There's a little bit of resistance up here around about 0.8885. So what I'd like to see again is if price is trading above it, could we get back to it for the potential rally up into this key level? Then are we going to break out of the traded level of last week, the week prior? And if we do break above that, like we're kind of anticipating, that's when I'd start looking for longs up into the sort of major level of 9115. Okay, so keep an eye on this one as well. But three charts that I really like the look of going into this week: Euro US dollar, Kiwi US dollar, especially like that one, and dollar Swiss. Thanks for watching, and I'll speak to you soon.